Pleased to be here today, everyone. Hopefully I'll take you through some interesting pieces around not only just Mangopay, but kind of what we see in the market with regards to marketplaces, payments, and that, I guess, cross-section of complexity that comes with the different various sort of payment flows that we see. Quick introduction about myself. So I joined Mangopay earlier this year in April. Before that, I was at PayPal for 4 years and joined PayPal through their acquisition of a company called Hyperwallet, which was a payouts payments business. So I've been in the industry quite a while, and specifically, what's always engaged me is the complexity that comes with marketplace payments. And as we've seen the marketplace space kind of grow, that complexity's only got sort of harder and more challenges. So we need to be more innovative to solve those problems. Here we go. So that's the title of the presentation for the next 20 minutes or so. And really what I've tried to do here is just unpack where can you have innovation across the what we call a full stack offer. So effectively pay in all the way through to pay out and all of the pieces that come with complexity of marketplace payments. I covered this bit just now, and I think important to understand is what is Mangopay. So we were launched nearly 10 years ago, and was previously owned by a French bank, which is Credit Mutual Archaea. And earlier this year, middle of this year, we were acquired by Advent International, which is over 2,500 what we call platforms. There's a variance of pure play marketplaces, traditional retailers moving into marketplace, two-sided platforms, ISVs, and so on. 30 billion in transactional volume, high growth business, and we have roughly 300 people now, actually. So we're sort of in this nice stage of the business, high growth. So I wanted to start off with why marketplaces grow very quickly. I think as we know, and we've all seen that sort of, I guess, piece around Uber doesn't own any cars, Airbnb doesn't own any homes. So the reality is it's digitally native, it can scale very quickly. And we see that traditional e-commerce is struggling to keep up with the marketplace model. And so we ask ourselves, why is that the case? I think a lot of people look to buy for different reasons, and marketplace can offer the services that they require for those different reasons. So if that is a marketplace for goods or services, it might be because it's cheaper, it might be because there's more option, because it's more geographically available. We see that preference happening for a number of different reasons. I think the preference is also that marketplaces strive to give that optionality to the buyer and the seller. And with that supply and demand, they can keep that balance true, or at least attempt to create better conversion. So some of these stats here I think are very interesting. Over 50% of those online buyers made their last purchase on a marketplace or a platform. And then there's that 2 times growth as well. And so this evolution that we see, I find super interesting. If you go all the way back to the late 90s and dial-up internet, and sort of this concept of matchmaking was always present. So Craigslist, eBay before PayPal, Marketplaats, which is a large consignment marketplace that's based in the Netherlands, and so on. And as you start to see this growth, as the internet's evolved, as consumers have evolved, as mobiles become more present, we're moving into the likes of vertical specialization. We're looking at more transactional-based marketplaces. The Airbnbs are a very interesting use case because the complexity of travel payments layered on with quite high-value transactions, and needing to be able to have payments that are made today that are then only may be delivered in quite a long time in the future, completely changed. And then you go into more transactional on demand. We see the mobility providers, people like Uber, Tier, Glovo. And now where are we going next? And I think what's really interesting is as we look at B2B marketplaces is definitely a big trend that we're seeing, and the payment complexity there is quite large. What we call the passion economy, mobile first kind of video shopping, more interactive type marketplaces and platforms. And also this concept of reasonable consumption. As we look at the macroeconomic trends, we look at the war, inflation, we see the likes of C2C marketplaces, reusable goods, recyclable items becoming a very popular trend for growth. So I use this slide because I think it's important to understand where does complexity really come from. For us, what we look at in complexity isn't just the total processing volume or the transactional volume, but it's the global coverage that sort of comes in balance of this. So you have some what we call local heroes. There is still complexity in that, but obviously as you go more global and you get into this top right-hand corner, this is really where you start to see complexity in payments, not only just because of the cross-border, but because of the localization requirements, the regulation, and also the supply and demand, right? You're trying to match buyers and sellers or riders and drivers or so on and so forth, becomes quite difficult. And so the payment is kind of the core, the crux of that trusted, valued network between the two. So the entire payment chain. We've got what I would say is 4 buckets for this. So I think pay-in is pretty much self-explanatory, and we'll go into that in a bit more detail of how we can innovate in that space. We call it a wallet environment, but for lack of that, a term around that, it's really the case of where does the money be, where is it held at the point between those two parties, right? It's a very, very important point because regulation is catching up, and to hold that money becomes critically quite important. It's also difficult, and it also brings in fraud and KYC, which we'll touch on. Payouts, for me, payouts sort of has a special part in sort of my experience in that I really believe payouts has caught up, but it's still got a long way to go with regards to user experience, user interface, getting paid in the method that you want, having transparency, and so on. And then what we call value-added services. And these areas here are really where we're seeing huge amounts of innovation in how can we have shared services that come into a payment chain that allow for the payment to not only happen successfully, but how does it happen quicker and more transparently. So pay-in. I think in this room we're probably well covered in terms of the more basic pay-in type knowledge. What I think we're trying to sort of understand on this slide is that platforms desperately want more payment methods. They want to reduce their cost. They want to increase the speed in which they can go to new markets with new payment methods. And ultimately, that last piece is a very important trend that we're seeing. They want to be able to self-serve. Especially the larger platforms and marketplaces, they're really growing into being their own payment teams. They're looking at their own licenses. They have the knowledge internally. So they don't want to always be 100% reliant on a service provider. They want to be able to bring in various people to be able to help and then self-serve and manage. And so why do they want to do that? Optionality. I think when you look at the different payment methods in Europe, it's complex, right? And it's not just about entering a market for the demand side to have the best way to pay, but it's also the options to surface the right options to the right type of demographics or the right type of payment. So if you're selling a watch on Chrono24 as a consumer and I'm purchasing that watch, that £5,000 or euro watch probably has a different payment experience that I require than a 20 euro t-shirt from Vinted. So you have to consider how that optionality plays a part. Cost, now we've got the question up here and I think cost is obviously important for everyone. We can't ignore that. But Chris sort of touched on this, is how do you optimize cost? Cost isn't always about the unit economic value, but it's actually about success rates, it's about having the right options, conversions and so on. So we look at being able to mitigate or manage costs effectively through those different orchestration layers that you can have for payments. Speed, I mentioned this, ability to A/B test in real time. Something we see as a big demand is being able to say as a platform or marketplace, how do I A/B test? So if I turn PayPal off, what happens? If I have Apple Pay, what happens? If I turn both off and just have traditional credit card, what happens? And so being able to be quick to market, understand the behaviors, right, when you do these tests, and doing it quickly and effectively. And lastly, the self-service. So internal teams being able to manage their payments. This is just 101 now that we see. So I move on to wallets and ledgers. we use the term smart wallets, but I think this is really starting to become a very important part of a marketplace or platform's set of requirements. And it's not always about a wallet being something visible or something that you can surface, but it's about the way in which reconciliation, automation of money movement can happen. And so having this wallet infrastructure we're seeing as being very, very popular at the moment. And so it's for us, the way that we look at that is solving complexity through the wallet infrastructure. So being able to have a customizable workflow. One of the things we see with marketplaces and platforms is you might have a single buyer, but you have multiple vendors that you need to pay. A transaction on an Airbnb payment, for example, might be a payment for the stay or the property, but also for a taxi. It might also be for the cleaning. It might be for another service, right? And so we see that those customizable workflows can really only happen when you've got when you decouple the pay in and the pay out, and you have a kind of wallet infrastructure that allows you to manage those flows effectively. Talked a bit about reconciliation and money flows. I think Daniel's coming on later and we'll talk more about that, but I see that as being a very, very innovative space on how can you make reconciliation happen in real time? How can you have a good funds flow whereby funds may be sitting in the ether, you know they're going to settle, but you can advance them quicker and so on. Embedded finance, we keep hearing this term a lot, but we see a lot of this journey happening, right? How can you engage in financial products and instruments that allow for platforms to have inertia with their supply and demand side, right? How can you pay out sellers quicker? Can you offer credit? Can you offer balances? How do you offer foreign exchange in a complex workflow? Wallets allow you to do that, and the ledger allows you to move money quite quickly and transparently. Last year, and this is quite a unique thing to Mangopay, but I do think we're seeing a big trend here, is this respend and refunds use case. Some platforms have the need to have buyers and sellers, or supply and demand, as vice versa. So a buyer could also be a seller, and a seller could be a buyer. And so this kind of circular money movement, rather than pushing the money out to a bank account or onto a card, respent, put through scheme rules, authorized back through, settled into the wallet again, you can actually keep a closed loop system. And we see that being very popular for a number of use cases, one being the respend, but also for refunds, as refunds can be quite expensive, and in marketplace and platforms, they can have quite a high refund rate. And so how can you engage your buyer to say, well, if you choose the option to get paid back into a wallet, your money is instantly available to you, and you can respend that on the website or the platform, however you wish. Fraud and user identity. This covers across the whole full stack value chain. So for us, pay in, there is a payment fraud requirement. So the idea there is to lower the friction, have an understanding who the buyer is, and so on. But then we look at the e-wallet environment and the payouts, and this is where, for platforms and marketplaces, it becomes quite unique. By having that wallet infrastructure and solving that complexity, you also get a heightened level of risk and fraud opportunity. And so we look at account takeover fraud and account fraud in general, where we can actually take a buyer and a seller and kind of connect the two, right? Because on those marketplace and platforms, you always have that two-sided consideration. And so payouts, again, we talk about seller fraud, but this isn't just KYC, KYB, right? That's the regulatory tick box that we need to do. We need to make sure that we follow the rules and regulations, but the innovation has to go deeper than that. And so it's about scoring the user, being intelligent in the background, without them knowing that you're looking at things like biometric data, you're looking at how they're using the portal or the dashboard or their mobile SDK app. And where's their fraud and abuse? So it could be soft fraud, it could be using marketing codes in a certain market. I mentioned Nethone earlier, but they work with a number of platforms and marketplaces, and they see a lot in this in mobility, right? Where Lime Bike or Tier or one of these brands can give you £10 off or £10 account credit. but it was only in certain cities, but they didn't lock that down. And so people were across all these different cities getting 10, 20 euros and filling their account up around on their wallet. And so it's very interesting as you start to create innovation, you also bring a bit of complexity that you need to get on top of with what we call know your user. Payouts. I put what I see as four pretty good examples of businesses that do very global payouts, some of which I've worked with before. But I think the four key areas here: global reach. This has become quite easy to tap into now, not only with banks, but also with other PSPs. I think as a consumer, I love the Wise product. I think it's an excellent piece of work that they've done to kind of completely democratize that cross-border payment flow, get transparency and know what you're paying. But they've got a pretty good global reach now. If I go back 5, 10 years, there really wasn't one bank or one provider that had a solid global network of over sort of 50, 60 countries. Now you can probably get to about 130, 140, 50 countries through a PSP, whether it be us, Stripe, Adyen, and others. Speed of delivery. So this is where we're seeing a big trend at the moment. And people, the supply side of marketplaces are actually happy to pay for this, cash flow being a big element to that. Airbnb just launched something with Visa, which is their Visa Direct product, which allows for the homeowner to get paid effectively instantly, with an asterisk to that because the card has to be issued and sort of onto the rail, but they are charging 1% for that, a premium, right, to get paid quicker. And so we're seeing speed of delivery, instant payments. We've seen the mandate from the European Parliament and making SEPA instant a requirement and so on. That speed is becoming of essence. I mentioned optionality on pay-in, but I see a huge opportunity even further for payouts. As we engage in open banking, we look at wallets, payments to cards, payments to bank accounts, mobile payment methods. That network of options to get paid out is becoming broader, and we need to understand, what options do you give on payouts so people can get paid in the way they want to get paid. And lastly, user experience. Long are the days where people expect to just punch in a sort code and account number and just hope for the money to turn up. They want to have visibility. They want transparency. If you look at a parcel delivery now, you get a DHL link. You can see that. You can see it's in the hub. It's gone to the warehouse. It's out for delivery. It's coming to you. And that sort of user experience, that payment journey, is very important, right? People want to know where their money is. Lastly, we talk about value-added services. This is quite a broad area, and one of the challenges we have is to know where do we spend our dollars to go and offer these types of services, to have that broad spectrum of the different needs. One of them is orchestration. We're at the moment going through a process, and we'll be offering orchestration as a service on our platform, whereby platforms and marketplaces can technically use third-party PSPs. They might have a direct acquiring relationship, but they actually want to use the wallets, the payouts, the KYC, and the fraud, but they have their own relationship on the front end. And so we will be adding that to our depository of products, if you will. But this allows for customized flows. We talk about reconciliation, also account tokens and updaters, least cost routing, retries, and so on. Connectors, this is something very interesting that we're seeing as a trend. Shopping carts, WooCommerce, Shopify, Wix, and so on, becoming very popular for the startup SMB marketplaces to use as a front end, and then as they grow, they have to go and consider what are the complexities that come in around regulation and so on. We have marketplace specialists, Miracle, but there's plenty of others as well, who are helping these large brands move into the marketplace space to increase their supply side. So we have connectors with those businesses, accounting connectors, SAP, Oracle, and so on, and CRM connectors. So how do we have connectors, marketplaces, so that they can have instant Slack notifications and so on, so they can speak to their customers and they can actually be in control of their own destiny with regards to who and what how they talk to their customers. Data, big piece here, and I think without unpacking it too much, data has become such a key part to payments that you can customers want to have real-time access, clean dashboards. We work with a company called Snowflake with a very interesting model today where some of our biggest customers will get their own dedicated Snowflake account. They can see it automated, real-time, they can go in and so on. So how do we actually take that and make that for the masses? That's going to be the sort of next biggest challenge in data, surfacing that correctly. And as we know, a lot of payment providers, they don't, whether they give the actual underlying data, the card type and so on is very complex. So tackling that challenge is important. We'll talk about buy now, pay later later on today, but I think very interesting around how does the buyer have a credit option, how does the seller have a quick payout option, working capital. We work with a company called Hakodo that allows mostly in B2B transactions, but there are plenty of others as well. And the last one is treasury as a service. We're seeing as that complexity and that global requirement starts to expand, how does a company or a marketplace platform enter into a service where they can move the money pots, they can actually manage their own currency, right? And they're not being dictated, whether it's by scheme rules or their payment providers, that forces them to take a sort of 300 basis point hit, right, on the buyer or the seller. Yeah, how can we solve that complexity and be innovative to help create that global treasury? So in summary, you have this full stack marketplace offering that really sort of helps to drive innovation in all of these different variables that we've covered here in the last 20 minutes or so. So we see marketplaces are growing twice as fast as first-party e-commerce. The evolution is really embraced payments and marketplaces, and they're sort of keeping up with that trend, which is interesting to see. Complexity comes from those various factors. But I always think it's important to break these modules out and not look at it as a single payment flow. You have to understand these different areas to drive innovation. Automation, orchestration, and speed, some of the key areas. So I was asked to put a few future predictions together as well. I think the term payment infrastructure, we're starting to see this come through for platforms and marketplaces. They want to be the masters of their own destiny. They want the infrastructure so they can take modular services from different providers and kind of build their own infrastructure, so to speak. And not always just from one provider. The concept of that 7 lines of code and just going live instantly, it still resonates somewhat with startups, but really once you get into high growth, complex platforms and marketplaces, having a multi-vendor solution is becoming more and more popular. Embedded finance, we touched on this, but I think there's a huge growth towards that. We've seen some businesses in our space move towards having banking licenses, being able to offer credit and lending and far deeper services than just the payment themselves. And then Web3 and the advanced blockchain, I think it's still in the buzzword area, but I think we're starting to see that mature, where I think it can really help with payment speed and reconciliation and transparency. So we'll see where that takes us. So thanks very much, everyone. Appreciate your time today.